Interest rate hikes? What? What is going on, everyone? Jeremy Ritz here. Courage pays better than fear trading. Just finished up a swim. Longest so far of this Ironman training block, and I'm making progress. I still look pathetic in the pool, and that's okay, but we're making progress. But this episode's not about that. We're talking markets here today. I took yesterday off because my oldest son and I had a special day plan where we just focused on him. We have this game that he and I are both into, and so they release this game every so many years. Yesterday was one of them. We played it. We spent the day together, so it was fun. So I took the day off from YouTube, but I'm back here today. But anyway, let's talk markets. So the pressure to the downside is still here, and we're seeing that across the board. The market tried to rip yesterday. We had some really nice moves across the board. We saw some nice movement in big tech, but it couldn't hold, and you could see that long upper wick on the SPX when it tried to get above the 50 and the 10, and it just couldn't hold it. And so what we printed yesterday was a lower high. So we are still in that warning area because prior to that we set a new recent low, and so things are looking tenuous, like they can come down. So we've got to be ready for that. And when you look at all the catalysts out there that potentially can pressure the markets to the downside, they are plentiful, and the primary being war between the United States and Iran. And it seems at this moment it's an inevitability. It's just a matter of time before the first strike that war is declared, and that happens. And obviously, first and foremost, it's about peace and making sure lives aren't lost. Don't want to see war. That's an obvious statement, but I want to put that out there. But we have to talk about the implications and what that means for the market. Last night in our blueprint class, our year-long mentorship, we talked about war and the impact of war on the markets. And typically what you see is initially you get a significant drop, right? There's a significant drop at first. It can last anywhere from 1 to 3 weeks to a little over a month. And if the conflict is concentrated and isolated to just the two countries involved, you'll typically see a positive response because war is bullish for the markets. If the conflict spreads and pulls other people in and it turns into something major, like if we're talking a world war or something more significant, then you could see sustained weakness in the markets to the downside. So just keep an eye on that. Again, I'm hoping that this doesn't come to fruition, but we can't bury our head in the sand. We have to be aware of what potential negative catalysts can be out there. So you have that. But then you also had the Federal Reserve meeting minutes released yesterday. And in the notes, it said that there were some members of the Fed who wanted to be on record to say that, hey, if inflation proves to be stubborn and persistent, that potentially rate hikes could be on the board. And I will say this on record, and we could come back to this. If interest rates get raised, we will have a bear market. Doesn't mean it has to be a super long one, but that's going to happen. That's my take. That's my perspective. But if you look at the history of raising interest rates in the market, it is not good. So whether that's just all lip service, who knows? We'll see, but pay attention to that. And that's why this PCE report that we're getting tomorrow, which is the Fed's preferred gauge of inflation, is going to be critical. If that comes in high, be prepared for more downside volatility. We also get GDP tomorrow, so pay attention to that. But here's the thing. The inflation that we're currently experiencing in the economy is not something that the Federal Reserve interest rates can control because it's induced by tariffs. And so even if the Fed were to raise interest rates, it's not going to impact tariff inflation. It's just not. And the risk that the Fed is running is if the labor market keeps weakening and they don't cut rates, it's going to negatively impact the consumer. And it's going to have far more dire repercussions if they don't cut versus if they do. So they're kind of in a bind, and more than likely we are going to see rate cuts. So we're just kind of in this purgatory period where things are just kind of floating, and we've been in that situation for quite some time. We've been chopping. We're going to need that flush and reset of valuations before this market can continue up. And with all these negative catalysts that are just hovering right now, if it is a strike on Iran that happens, that will trigger the sell down. We will break below that 200. We'll even drop below it. And then once some stability comes out of that, then you can see this thing rally again. So you just have to be aware of all those pieces and what's happening. I will say this, from a day trader's perspective, this volatility is beautiful because we're able to trade the market up bullish, we're able to trade it down and profit both ways. So it's a day trader's paradise out there right now. Swing trading and long-term portfolios probably look pretty garbagey. That's not even a word. I'm just making it up. But they don't look good right now. But it's part of the process. At longer term investments, you have the 5, 10, 15, 20, 30-year perspective, so it doesn't matter. It's just noise. Don't even look at it. It is what it is. And swing trades, I don't think now's the ideal time for that. You got to see some strength come in first. So there you have it. There's my take on the markets, what is happening, and we'll see. I got the red on today. We're red at open here right now. Not trading the open because I did the swim workout. But let's see how this thing plays out. Let's see if we get the flush today. Big day tomorrow on Friday. Be ready. GDP, PCE, and if that wasn't enough, you've got the Supreme Court tariff opinion. There's just so much going on right now, and it's coming. It's coming. So, all right, ladies and gentlemen, with that said, make it a great day. Honor the moment. And most importantly, be grateful. Love you guys. Take care.